Hey guys, welcome back. It's been a while since my last episode of the crypto forecast, so welcome back everybody. I kind of missed these formats. Today we're going to be having a look at Bitcoin, at the chart of Bitcoin versus the US dollar, and also I'm going to be sharing a very important lesson that I've learned myself. I made a video talking about this in the past, but most of you probably missed this video because crypto videos get watched only the first 1 to 3 days and then no one watches them again. So yeah, I'm going to be repeating this exact same lesson because it applies to the current situation in cryptocurrency right now. But first, let's just take a look at the Bitcoin BTC versus the US dollar. This is the 4-hour candles from Bitstamp as usual. And guys, we are exactly at resistance. I have been talking about this. I have been saying I want to wait until the price approaches or touches resistance and see the initial reaction. Actually, this is what I said in my last video. Let's just play it.
We gotta wait and see how the price is going to react when we approach resistance. If you see the initial reaction when we touch or approach the target is violent breakdown, big candle, big red volume, assume a dump that's gonna be probably pretty deep. In the other hand, if when we touch resistance for Bitcoin at 4,200, the price doesn't really break down, it only retraces a little bit because it's normal, it's touching resistance. It goes down but not super fast. The volume is not larger than average or anything, the volume is still normal or decreasing, and the price just goes down a little bit, and overall you see the price that stays near the target for a sustained period of time for a few candles, daily candles or weekly candles. If the price manages to stay there near resistance, near 4,200, then you can anticipate that the price is going to stay stuck there for a long time and then reevaluate later. Then we will see if the chart gives us more signals that it's going to break in the upside or in the downside. We will reevaluate later.
And as you can see, it touched resistance and nothing really happened here. It's just retracing a little bit because it's normal. It's a main resistance here. This line comes from all the way from the top of the market. I showed the long-term chart so many times. And yeah, so right now we are at main resistance. The price is rejecting a little bit. It's normal, but nothing crazy is really happening. You see, there's no crazy spikes of red volume or anything like that, which means there's, so far at least, I hope this video is still relevant by the time you watch it, because, it could be that it starts breaking down by the time I upload this video. But so far it seems there's no huge sell orders at this level or anything like that, which signals a strength. I see there's a lot of signs that are pointing out that crypto, it's more probable that it's going to break in the upside and not in the downside. But of course, you can make the argument for either direction, really. There's a lot of mixed signals. So until the resistance line is cleared, there's nothing really to celebrate here. But the fact that the prices are staying here near the resistance area, and there's no big dumps, there's no big spikes of volume, it signals continuation usually. So we will see. Now, the actual lesson that I wanted to share today in this video is that this situation reminds me a lot to when I used to trade forex. Maybe some of you know here, I used to trade forex a few years ago when I started getting into trading, and I actually learned this lesson by myself by losing a lot of money. This is not a lesson that I've learned in the books or in webinars or anything like that. This is actually a lesson I've learned personally by losing a lot of money. So it'll be good if you guys can learn this lesson from me, and so you don't have to make the same mistake and lose a lot of money like it happened to me in the past. So the thing is that when I used to trade forex, there were times where I would look at the US dollar index, for example, and I would see very clear either bullish or bearish signals. For example, the direction of the trend was very clear, either in the upside or in the downside, or maybe there was some very clear high quality trading pattern that it was going to break either in the upside or in the downside. And this is when you open trades, right? When you have very, very clear signals, very high quality signals, this should be the only times where you actually open a position, when you are pretty much certain that the price is going to move in your direction. Even when you have very clear signals, there's no guarantee that the price is going to move your direction, and in many cases, like easily 40% of the times, you will be wrong and the price will break in the opposite direction. But what happens with forex or with cryptocurrencies, this is very similar. These markets, have similarities. Is that, for example, in forex, when I would see the US dollar index, let's say I had a very, very clear bearish pattern about to break in the downside, and then I would look at other other currencies traded against the US dollar. For example, the Canadian dollar or the Australian dollar or the euro, whatever other currencies traded versus the US dollar, and they were obviously inversely correlated. So if the US dollar index was bearish, any other currency traded against the US dollar was bullish. They had the same type of a structure but inverse. So they were going to break bullish by probability. So what I would do is I would open a bunch of trades, a bunch of positions. I would open a position for euro versus the US dollar, for Canadian dollar versus the US dollar, for Japanese yen versus the US dollar. I would open positions in all the currencies traded against the US dollar, and I would open long positions because the US dollar was really bearish and all the other currencies versus the US dollar were setting up very bullish. So I would open a bunch of trades, and if I was right in this specific thing, it's just one thing, right? If I'm right in this thing, I'm gonna make a lot of money because I open a bunch of positions. But if I'm wrong in this single thing, in this specific thing, then all of my positions will be losing positions. So I've learned after losing a lot of times doing this that it's smarter to not open more than one trade at any given time going the same direction, in a situation like this, like in forex or in cryptocurrencies, because all the charts look similar, right? All the altcoins versus the US dollar or versus Bitcoin have bullish structure. All of them look like they will probably break bullish. So if you open long positions in all of them and you are wrong in this specific thing, all your positions will be losing positions. So my advice here, what I've learned is don't open more than one position at a time going the same direction when you have a situation like this, because if you are wrong, which it happens very, very often, all your positions will be losing positions. And I'm going to share something that I shared here yesterday. I think it was with my premium members on the Telegram groups. I did open a long position in one altcoin, even though I think all of the altcoins look bullish versus the dollar and versus Bitcoin. I'm opening only one single position because I know if I'm wrong, I'm going to lose only this one position, and my stop loss is very tight because the setup is perfect. It's giving me a very good risk to reward ratio. So even if I am wrong, which I could very well be wrong, because this is, sometimes it looks so obvious that when it's that obvious, sometimes it goes the opposite direction, because that's what markets do. Markets will troll the maximum amount of people, every time. So I could very well be wrong, but that's why the lesson of today, that's why I opened only one single position, which is OMG versus BTC. I shared this on the groups yesterday. I shared the OMG versus the USD. This is the position. The reason I picked this one coin, even though it could be almost any other altcoin, because as I said, they all have very similar, structure. Crypto markets move together. They are all very, very similar, all the charts. But the reason I picked this one is because it already broke out bullish out of this rounded bottom pattern here. So that was my entry basically at the breakout line. And my stop loss is right below the breakout line. And this is my the profit target, which is the target that you get from this rounded bottom formation here. So this would be OMG versus the US dollar, very similar with OMG versus BTC. This is the entry point after it broke out this main, important resistance line. Now it's supposed to be support. But check this out, I said here, the chance of this being a fake out is actually not so unlikely, having in consideration that it has already gone vertical in the last move. As you can see here, it's gone pretty vertical already, so usually you don't want to enter long after it's gone up already this much and this vertical. And all the choppy resistance we have over there in the left at this level, which is all this area here. Maybe the price will actually roll over and hit the stop loss. But the lesson of this video, it's fine if you have one stop loss hit. What's important here, the main takeaway of this video is that don't open more than one position going the same direction. Whether it's forex or cryptocurrencies, when you see situations like this that all the currency pairs are bullish or bearish against one cryptocurrency pair, in this case the US dollar or Bitcoin. You know, even if everything looks very, very clear and, you know, you're playing with the probabilities in your side, don't open more than one position, because if you are wrong, which is, you know, it happens all the time, you will lose all your positions. So that was all for the video of today, guys. Thank you very much for watching, and I will see you very soon. Bye.